Royston Wild Monday, 25 September 2017. More on KWS. NASA image public domain. Nasstar LSE. NASA step to fresh 18-month highs in Monday trading after an approving if hurdless spectacular reception to interim results. The stock was last 1% higher on the day, after announcing that revenues grew 47% during January-June to £11.9 million, or 8% on an underlying basis. But the cloud computing specialist saw pre-tax losses swell to £1 million from £770,000 a year earlier due to the impact of its Nasstar 1019 restructuring program. Chief Executive Nigel Redwood took a chipper tone, however, and commented the program has gained significant traction, and I am delighted that we have seen the results of Nasstar LSE. NASA step to fresh 18-month highs in Monday trading after an approving if hurdless spectacular reception to interim results. The stock was last 1% higher on the day, after announcing that revenues grew 47% during January-June to £11.9 million, or 8% on an underlying basis. But the cloud computing specialist saw pre-tax losses swell to £1 million from £770,000 a year earlier due to the impact of its Nasstar 1019 restructuring program. Chief Executive Nigel Redwood took a chipper tone, however, and commented the program has gained significant traction in the first half, and I am delighted that we have seen the results of the initiatives materialize in these positive results, with Nasstar truly becoming one company in structure and name. As a result, trading in the first half of the year came in line with expectations. Redwood added new business has been strong, and I am pleased to see contracted recurring revenue continue to grow, and especially encouraged by the proof of concept that we are currently engaged in for a 1,000-user organization. This demonstrates further that our delivery model is becoming increasingly attractive to the upper quartile of the SME marketplace. GrowthStar, the company's 3-year Nasstar 1019 strategy, is designed to improve operational efficiencies and protect recurring revenues, a critical issue given the competitive nature of its industry. Repeated sales in the first half accounted for 90% of total turnover versus 88% in the corresponding 2016 period, and it secured new orders worth £139,000 of monthly recurring revenue in the period. And the tech titan's adjusted EBITDA margin increased to 22% of revenues from 20% previously, putting it closer to the 25% target Nasstar hopes to achieve by the close of 2019. With Nasstar's restructuring strategy clearly firing on all cylinders, the city expects the company to finally flip back into the black in 2017 after many years of profits failure, with earnings of 0.5p per share. This compares with last year's losses of 0.3p. And the bottom line is expected to keep on igniting, with a 20% improvement forecast in 2018 to 0.6p. While Nasstar's forward PE ratio may look a tad toppy on paper, a reading of 19.2 times sales above the wittily regarded value watermark of 15 times, such multiples are not rare in the tech sector given the potential for brilliant profits growth. Indeed, I reckon the company is worthy of a close look right now. Gaming great Keyword Studios LSE. KWS, like Nasstar, is another great growth stock dealing on heady valuations. The company, which provides technical assistance to the world's biggest video game developers, is predicted to generate earnings growth of 44% and 23% in 2017 and 2018 respectively. As a result, Keywords deals on a prospective earnings multiple of 49 times. Still, the Dublin firm's brilliant sales record could arguably make it worthy of such premiums. It saw revenues blast 50% higher between January and June to €63.8 million, a result that caused adjusted pre-tax profit to rise 60% year-on-year to €9.6 million. And I reckon its ambitious growth strategy it is heavily engaged in and boosted its facilities in India and Japan in the first half should keep revenues moving higher. But Keyword Studios and Nasstar aren't the only growth greats waiting to supercharge your stock's portfolio. Indeed, the Motley Fool's A Top Growth Share Report looks at a brilliant FTSE 250 stock that has already delivered stunning shareholder returns and whose sales are expected to top the magic £1 billion marker in the near future. Click here to enjoy this exclusive wealth report. It's 100% free and can be sent immediately to your inbox. Royston Wild has no position in any of the shares mentioned. The Motley Fool UK has recommended Keyword Studios. Views expressed on the companies mentioned in this article are those of the writer, and therefore may differ from the official recommendations we make in our subscription services such as Share Advisor, Hidden Winners and Pro. Here at the Motley Fool we believe that considering a diverse range of insights makes us better investors.